I hope you are enjoying this event. It's a pleasure for me to introduce you now to Nadeem Hussain. Hello, Nadeem. So Nadeem is globally recognized for his dedication and service to financial inclusion. He chaired the United Nations MDG session on financial inclusion in New York in 2010, and he's a frequent speaker at international forums on branchless banking and microfinance. He was also awarded the Global Leader Award in 2011 by C5 in Geneva, and he's here today to talk about financial inclusion for the next billion users. So without further ado, Nadeem, I would like to invite you to take over with your talk. Thank you. Nadeem, I think you're muted, so we can't hear you.
There you go.
Perfect.
Right, much better. Thank you very much, and thank you, Ariana and Scott, for organizing this conference. I think in the COVID era, this is what is required. The reality is that, in my view, financial access to finance should be viewed as a human right. Everybody should have the opportunity to have access to finance. Access to finance means having a basic bank account, being able to make payments, being able to save, and potentially have a credit score. The way globally our banking world is construed, especially in emerging markets, what happens is that the long tail customer, which means the people who have small balances or will not bring profit to the commercial banks, are totally ignored. As a consequence, globally, the number of people who are without financial access is huge. And it's empirically determined that if you provide financial inclusion or access to capital or payments or a saving mechanism to the bottom of the pyramid, it can have a huge impact. It can actually move the needle in a particular country. So my view is that it is not the commercial banks of the world, it is not the industry leaders of established industries like the commercial banks or the insurance companies which are going to change the needle. It is going to be the young generation, it's going to be the fintechs, it's going to be the startups which are going to change this ability of the bulk of the people in the world to get access to credit. The challenge immediately that will come to people's mind is, how do we don't have access to capital? How are we going to set up this company? Banks have huge brands, banks have lower cost of funds. How are we going to compete? You're going to compete by looking at what the customer needs. Commercial banks, unfortunately, don't look at the customers, what the customers need. I spent 27 years in Citigroup. We were arrogant bunch of people, like commercial banks remain right now. We decide what the customer needs and then shove that down the customer's throat. The UI, UX is not a priority for most commercial banks. Customer satisfaction is, unfortunately, especially for the long tail customer, not a huge priority for most commercial banks. So how do we get 1 billion new people to have access to financial inclusion globally? Largely the people who are disenfranchised are in the emerging markets. So parts of Africa, parts of Asia, parts of Latin America, where most emerging markets exist. That's where we want to be able to get people to access to financial services. So one of the first things you need to determine is what is the phone density and what is the banking density in a country. The reality is that feature phones and increasingly now smartphones is something that everybody is beginning to get, or if not get, they have or they share. For them, it's a necessity, it's not a luxury. The elite have iPhones, that's 0.01% of the world's population. Most people use a feature phone, but feature phone is slowly converting into a smartphone. So in order to get 1 billion people into the financial included world, you need to use existing railroads rather than construct your own. That means you have to look at existing infrastructure that exists, and on that infrastructure you have to lay in the financial services rather than create, because no fintech can create 1 billion people financial infrastructure is just too expensive. So you have to figure out what exists and how you're going to use it. So what you can do is policy advocacy. First of all, you have to see how many people in your country have access to a feature phone, smartphone. What are the taxes related to the import of smart and feature phones? So how can you influence to bring that cost down, so the acceptability and the buying power that exists in emerging markets is somebody that can get into a smartphone, because a smartphone changes a person's life. But we also must have solutions for the feature phone. Secondly, you need to figure out what is the coverage within your country of the telcos or the MNOs that exist. Are the bulk of the people have access to, even 2G, if not 4G coverage in your country? This railroad must exist if you are to acquire 1 billion customers. You cannot use banks' traditional bricks and mortars to even remotely get close to this number. You must leverage the telco railroad of handsets, connectivity, and also in most emerging markets, the way people pay or for subscribe to airtime is on a prepaid basis. That means they need to pay upfront and then they get airtime as credit. How do they access that airtime? Again, traditionally, they do it physically at an agent. So the agent network that exists has to be used as a conduit for banking services or financial services. Typically, in any country, let's take Pakistan, 12,700 bank branches, 100,000 agents, unique agents that sell airtime. So you need to figure out how are you going to convert those agents that are selling airtime to become financial centers. For that, you have to work with the regulators to create branchless banking regulations. I'm emphasizing this because if your ambition is in your country to move the needle for financial inclusion, you need to see what the infrastructure is first. Do banking regulations exist to do branchless banking? Does the telephone density and the phone density leverage exist for you to be able to utilize that to use that railroad to use your services? Now, let's say for the sake of argument that in your country you have a huge network of agents selling airtime, you have a phone density of 60-70%, but a banking density of 10-15%. How do you now use that railroad to get to this billion number? The first thing you need to figure out is the first thing a bottom of the pyramid person needs to do is to make a payment. And the most common payment they used to make, the top 5 payments are: every month you need to pay a utility bill. Every month they need to buy groceries. Every month they need to pay transportation cost. Every month most people need to pay school fees. So you take the 5 top use cases that a average person needs to do who doesn't have a banking account. Because in emerging markets, the number of traditional banking accounts are far and few between. Once you've established the use case, and this is where most commercial banks fail, they don't take time to understand and research what the customer wants in terms of the use case. I'll give you a very simple example. When my team and I launched Easy Paisa 20 years ago, we were looking for a use case. And we found out the most successful use case was domestic remittance. People were using informal methodologies, using post office. Most people didn't have a bank account. Or when people were going to their villages, somebody would say, oh, somebody's going to the village, give him cash. He would deliver it to the family in the village. We used existing banking agents. In this case, my partner was Terranor. And we created a service where you could go to an agent and within 3 minutes or earlier, the money that you wanted to transfer could be done in 5 clicks and would be available in 100,000 locations. Now that changed and revolutionized the market. It's changed, they moved 13% of Pakistan's GDP in a single year through Easy Paisa in terms of domestic remittance. Why was it successful? Because it was a customer need. People needed to send money domestically. They were willing. We've charged 4 times what the post office was charging. Bottom of the pyramid people are not willing to pay as long as you show the value that you're going to give them. Has to be transparent, has to be secure, has to be convenient. So when you're looking to create 1 billion customers in financial inclusion, you have to figure out what the use case is. You have to make it convenient, you have to make it secure, and you have to make it transparent. In order for people to open an account, in our case in Pakistan and now I believe in India and other emerging markets, there are national databases which house people's identity. So there is a universal identifier in most emerging markets, or they're getting there. So everybody has a ID card. They're called different names. If those ID cards are biometrically verified, if they are in a central repository, then the KYC and AML, anti-money laundering and know your customer requirements go away largely because you can go to your central bank and say, I would like to have a bank account opened for an individual just based on a SMS message, because they are already biometrically verified, and based on the link between their phone number and their CNIC card, you can validate that from the central repository. So in Pakistan, we have what is known as a 1-minute account. All you have to do is send a message to a bank. It will establish the link between your phone and your CNIC card, validate that from the central bank, and immediately open an account for you in under a minute. When you do your first physical transaction, they'll biometrically verify you as well. That's the kind of convenience you need. If you want to have 1 billion customers, you've got to have a very simplified bank opening process. Now you have a mobile wallet account, an actual bank account. A bank account in a bank typically takes a week to 10 days to sometimes a month to open. Here we're talking about opening a bank account in 1 minute. That's the change you want to bring to the market. Now let's say you've got that. So now you've got the bank account. But unless you have use cases in it, that bank account will get opened, but it will remain dormant, or it will be used once a month to maybe pay a utility bill. People are still going to use cash. You want to be able to bring the cash into the digital economy. Once you do that, then any transaction, the people who are doing digitally start establishing a history. When you have that history, then you can create a profile. When you have a profile, you can create a credit score. When you have a credit score, you can lend. I mean, that's the whole sequence that you need to put forward. So let's say you need to put, as I said, the use case. Biggest use case is grocery shopping. And in Africa, Kenya, and Tanzania have been singularly successful in people being able to go to a mom and pop store and use digital credit as opposed to cash. Now, that needs to create an infrastructure. Previously, in the tier 1 merchants, you used a point of sale machine, but now with the introduction of QR, quick response codes, you can actually do this over a smartphone, either through a dynamic code where it exists, on a piece of paper, or a static code or a dynamic code, which means that every time you do a transaction, a new code comes up. That's just all you require. The merchant is to have a smartphone. You don't need to give them a $30,000 POS machine. If you make that available, you create merchant acceptance for digital payments through a QR code and with zero MDR or very little MDR, merchant discount rate. That means it's going to be tough convincing a mom and pop store guy that you're going to give 2% commission for digital transactions that are going to take place. It is not the need of the mom and pop store to have acceptance of digital payments. Their need is credit. And in order to give them credit, this is the conduit you're going to use, that if you accept digital payments, then I have a history of transactions at your location. And based on that, I'm going to give you credit. That's how you get them to agree to take digital credit as opposed to cash. Cash is very convenient. Although cash is expensive, it's one, if you figure out how expensive to use cash for a country, it's very expensive. But for the individual, for the merchant, it's not expensive. They don't keep your cash in transit insurance, and robberies are far and few between, so they don't like digital. You have to convince them why they need to have digital. The whole thing about digital is creating data. The whole thing about digital is creating personas. And when you do that, especially in emerging markets, you are then enabling your bottom of the pyramid people to get a credit score. So if you go and every month and you're buying goods from your grocery store, you're making a utility bill payment, you're using it for transport, and that's all those transactions are coming in your wallet. I now have the ability to create a profile and say, hey, this person is regularly making these payments. I'm willing to provide some of these payments, credit for some of these payments. That's how this chain starts. So merchants' acceptance of digital payments is very important. That's the payments thing. So the first thing you solve for is, how do I get people who are using cash to start using digital payments without paying extra? The second thing, which is an even bigger need sometimes than credit, is savings. And most of emerging market doesn't save their money in a bank account, because the rate of return sometimes is below inflation, so it's a negative rate of return. And sometimes it's very difficult for them even to open a bank account. How do people save? People save in Roscas. This is rotating credit where 5 people get together, they pool, let's say, $10 every month, and one of them gets the $50 in a go. And for some cases, some people, they do this because they're not part of a banking system. Some people do it because for Sharia compliant or Islamic banking, they don't want the element of interest in. That's how the bulk of the bottom of the pyramid save. How else do they save? In most South Asian emerging markets, they save in gold. They actually buy gold trinkets. Females buy gold. Whatever time they can save money, buy gold. It's used as saving as well as an ornament. And no bank is actually focusing on that. This is the way that the bulk of the population saves. And this is where fintechs come in and create solutions for how our Rosca saving, how can you digitalize that? How can you make that a very simple process rather than physically people getting together? Now, there's an element, a segment which people get together just for the social side. That's not your target market. But for the non-social side, people who want to be able to save in a pool of resources and use the Roscas or the committee product or the chit product, you have to create a solution, and fintechs are creating that. Same thing with gold. If I can create a product where if you have $1, you can buy gold, virtual gold, not a commodity, but actually you come to us and you give us $1. We buy gold physically at, from a gold vendor, but give you notional credit. Tomorrow you come and you have $2, and day after you want your money back, we should be able to give you money back. The bid and offer spread should be made available. So transparent, secure, convenient. You're going to then, now you're creating products for the bottom of the pyramid. Now you're actually doing something that the bulk of the customers not want, not what you want. So these are the use cases you need to create working on existing railroads, creating credit history. And lastly, what you want to do is also have an information flow. You need to be informing people, educating people, using gamification, like something that, FinMango. I should have worn a FinMango t-shirt that Scott gave me when I had gone to, met him in DC once. I still haven't. You need to provide information to the people who are at the bottom of the pyramid and the younger generation as to what finance is all about. So, Yana, thank you. This is what, I had about 20 minutes. I tried to encapsulate what the roadmap could be to get to 1 billion customers, and anybody in their own country can start working on this. I'm more than available to anybody that I can advise. We are doing this in Pakistan. We have close to 12 fintech companies now and 20 companies in total addressing the needs of digital Pakistan as opposed to just financial Pakistan. And I'm happy, if you people You can share my email or my WhatsApp number, and I'm happy to talk to and assist anybody who wants to pursue this route. Thank you.
Thank you, Nadeem, for your insights. It was super interesting, and I really hope we can get this digital inclusion you're talking about.
Thank you.
Thank you.